The Precious Metals Week in Review, May 8, 2015. Brought to you by Precious Metals International. Volatility continued this week as speculation over the upcoming actions of the U.S. Federal Reserve began to run rampant again ahead of the April Non-Farm Payrolls report. The number of Americans filing initial claims for state unemployment assistance rose by just 3,000 claims last week to a seasonally adjusted level of 265,000 claims, remaining near a 15-year low. The previous week's data remained unrevised. Last week's unemployment data will not have an effect on Friday's non-farm payrolls report for April, as the data fell outside of the survey's date range. Friday's non-farm payrolls report for April showed the addition of 223,000 jobs to the U.S. economy. The number was in line with economists' expectations of 224,000 jobs, but the data for March was revised downward to show only 85,000 jobs. The report also showed that average hourly earnings crept up just 0.1%, which led many to surmise that the Fed would not move to raise rates in June, since wage inflation is nearly non-existent. Strategist Jim Paulson said on Friday on CNBC's Squawk Box that, if you put in the revisions, it's a fairly back-to-back weak number again on average, below the 200,000 level with the negative revisions to March. Analysts speculate now that the Fed will wait until September before it considers raising rates. China saw both exports and imports plunge in April from a year ago. Economists had expected imports to fall, but had forecast a slight rise of 2.4% for exports. Exports instead dropped 6.4% from a year ago, and imports plummeted 16.2%, much lower than the expected 12% drop. The news sent the Australian dollar plunging to session lows, since they are a major trading partner with China. February and March also saw depressed levels for trade numbers, which were blamed on the Lunar New Year holiday across Asia. Economists project that the effect of the Lunar New Year should be out of the system by now, so continued weak trade numbers has heightened fears that the Chinese economy may still be struggling to turn around. Reuters reported this week, quoting policy insiders, that China's leaders, caught off guard by a sharp economic slowdown and worried about the risk of job losses, are likely to resort to fiscal stimulus to revive growth after a run of monetary policy easings proved less effective. Lian Ping, chief economist at Bank of Communications, was quoted in the article as saying, "Monetary policy will still be loosened, and we cannot rule out another interest rate cut, depending on economic data." Australia's central bank cut its growth and inflation estimates for 2015 and 2016 this week, saying that the economy is expected to grow at a subpar rate for a longer than expected period. The Reserve Bank of Australia also lowered rates for the second time this year and gave no indication about its intentions for future interest rate moves, saying that the Australian dollar is not yet weak enough to support the economy and further falls are likely and necessary. In Europe, the election in the United Kingdom saw a surprise win by the Conservative Party that gave them a ruling majority in Parliament. Newly re-elected Prime Minister David Cameron, in a speech after the election, promised to go forward with a referendum on the UK's membership in the European Union, saying, "Yes, we will deliver that in-out referendum on Europe." CNBC quoted a research note from Teneo intelligence analysts that said, "From the perspective of London's European partners, result is the worst possible outcome." Both emboldened by his strong performance and under pressure from his Eurosceptic backbenchers, Cameron can be expected to be a tough negotiation partner in the context of the now virtually inevitable referendum on EU membership. Amid ongoing negotiations with its international creditors over reforms required in order to receive additional bailout payments, Greece's left-wing government passed a law on Tuesday night that effectively reverses some of the earlier reforms agreed to under previous bailout agreements. Nikos Voutsis, the Greek Interior Minister, told Parliament regarding the decision to reverse the previous reform moves, "We aren't going to consult our international lenders. We don't have to. We're a sovereign state." The move is likely to increase tensions in the already combative negotiations between Athens and its lenders. Brent crude oil prices continued to hover over the mid-$60 a barrel this week. If oil rig counts continue to decline in the US, prices could maintain upward pressure as fears of oversupply diminish. If US producers begin openly discussing an increase in production on the back of the recently higher prices for oil, then oversupply concerns will likely trigger another drop in oil prices. The euro started the week drifting slightly lower against the US dollar, but had found a bottom by Tuesday and began climbing higher. Thursday saw a bit of a sell-off for the euro, but the sell-off had halted by Friday, and the currency appears set to close the week slightly higher against the US dollar. The Japanese yen started the week drifting essentially sideways against the US dollar, saw a very brief sell-off on Tuesday, but immediately recovered and began moving higher. The yen too saw a sell-off late on Thursday, but had recovered by Friday, and appears set to close the week higher against the US dollar. Volatility should be expected to continue. Friday's non-farm payrolls report in the US showed decisive job gains in April, but a deeper look at the numbers, combined with a significant downward revision to the March numbers, continues to give evidence of a struggling labour market in the US, which may lead the Federal Reserve to hold off on its expected interest rate hike until September. In Europe, the elections in the United Kingdom saw a surprise majority victory for the Conservative Party and a surge for the Scottish National Party, which may pave the road for two things: a referendum on the UK's membership in the European Union and an eventual second referendum in Scotland on independence from the rest of the UK. Prime Minister David Cameron has promised to hold a referendum on the UK's membership in the EU before the end of 2017, throwing the future of the unified currency bloc in further doubt. Greece's membership in the EU also remains in jeopardy due to its failure to negotiate sufficient socio-economic reforms that would satisfy its international lenders. Bloomberg posted an article this week that compared the ongoing crisis in Greece to Argentina's default on its sovereign debt in 2001. In the article, BNP Paribas SA chairman Jean Lemierre said the exit of Greece will send the Greeks into poverty. Nobody wants to see an Argentine situation, so there are good reasons why there should be an agreement, and the views are the same in Berlin and in Paris. On Tuesday, German Finance Minister Wolfgang Schäuble said that Germany would, within the range of our possibilities, do everything to avoid a sovereign default by Greece. When Argentina defaulted on roughly $93 billion of sovereign debt in December of 2001, the country erupted into turmoil as its currency plummeted, wiping out the savings of many Argentine people and triggering massive political upheaval. Ongoing discussions between Athens and the Eurogroup working group have continued, but a deal is not likely to be reached by next week, as had been expected, as the standoff over appropriate reforms continues. Elsewhere in Europe, Germany is beginning to show signs of stress as security couriers in Berlin and train operators for Deutsche Bahn walked out on strike. The security couriers are responsible for keeping Berlin's automated teller machines, ATMs, stocked with cash, and Andreas Spleinmann, a spokesman for the Verdi union representing the couriers, told news agencies this week there's no visibility when the strike will end. It can end today, it can last 4 weeks. That all depends on how the company reacts. There are now a lot of cash machines that are empty, and the pressure on the company will rise significantly in the coming days. The people of Berlin are likely to become restless indeed if they cannot withdraw cash as usual. The Deutsche Bahn train operators began a 7-day walkout on Monday, which has resulted in the cancellation of roughly 2/3 of train journeys in Germany. The drivers are demanding a 5% wage hike and reduced working hours. This means heading into the weekend that Berliners are facing not only a cash shortage, but travel restrictions too, and neither of those is likely to end well. We expect, with the UK elections now out of the way, that Greece will continue to be the driving factor for news out of Europe next week. As always, pay attention to global news outlets over the weekend for any items which could affect the price of precious metals. Even with a significant jump in the Dow Jones Industrial Average following the release of Friday's non-farm payrolls report in the US, stocks saw only a meagre gain for the week. Precious metals outperformed stocks for the week, but, of course, that fact went unremarked by the mainstream media as usual. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, May 8, 2015. Brought to you by Precious Metals International.